Realty Income has been a winner since going public in 1994. Take, for example, a $5,000 investment in the stock made 29 years ago would be worth over $240,000 with dividends reinvested. Realty is a dividend aristocrat, which means that for the last X amount of decades, it's been providing dividends and growing dividends to its bag holders. Before we get into the analysis, let's look at this article. It is coming from the Motley Fool. Here's how Realty Income can afford its 5.2% dividend yield. The past year has been difficult for REITs. Rising interest rates have raised financing costs for these companies. Because REITs often trade on a basis of dividend yield, determining the sustainability of the dividend is paramount. Realty Income is a REIT that focuses on developing properties under an unusual lease structure. Most leases are gross leases where the tenant is responsible for paying the monthly rent and little else. However, Realty uses a structure called a triple net lease, where the tenant absorbs most of the operating costs of the property, including taxes, insurance, and maintenance. These leases are generally last a long time and contain automatic escalators. Triple net leases are also difficult to break. Realty Income's tenant base is generally defensive, which means they sell items or provide services that are less sensitive to the overall economy. As an example, this is coming directly from their website, and some of their customers include convenience stores, grocery stores, dollar stores, home improvement, drug stores, restaurants, health and fitness, automotive services. Who are these clients? Well, we just named Dollar General as one. Drugstores include Walgreens. Convenience stores, 7-Eleven. Wynn Resort, I had no idea. FedEx, I had no idea. LA Fitness, I had no idea. BJ's, I had no idea. CVS, a given. Walmart, had no idea. Tractor Supply, even AMC Theaters. Red Lobster, Regal Cinemas, Lowe's. During the COVID-19 pandemic, most REITs were forced to cut their dividends as many of the tenants suffered. Realty Income actually hiked its dividend 3 times during 2020. Most of Realty's income tenant base was considered an essential business and permitted to stay open. Realty Income is guiding for 2023 adjusted funds from operations per share to come in between $3.96 and $4.01. Since depreciation and amortization is a non-cash charge, net income tends to understate the cash flow of the company. For this reason, REITs often look expensive on stock screening apps because they focus on net income and not FFO. At current levels, Realty Income is trading at a price to FFO ratio of 15 times, which is reasonable multiple for high quality REIT. REIT Income pays a monthly dividend of 25.5 per share, which works out to an annual dividend of $3.07. The annual dividend is amplified. It's ample covered by the FFO per share. Realty Income is a steady dividend payer. It should be a core holding in an income investor's portfolio. The last dividend that Realty paid was July 31st. Next payment, again, this is monthly, is going to be on August 31st. But they've been paying monthly dividends going back and back and back to 1995. And as you can see, in 1995 it was 15 cents. So today the dividend has almost increased by 100%. All right, let's get into the the analysis. We're going to start with the monthly chart. And we can see buyer stepping in at the $56 level. So this is an area that has been defended, as the buyers think that this is selling somewhat at a discount. Let's go down to the weekly chart. Now you can see from the moving averages there is more downside risk. You did have a fake breakout to the upside, but that was short-lived. Let's go to the daily chart. And this was that fake breakout I was referring to the upside. Prices did close above the 200-day moving average, but again, that was short-lived. Question is price coming into an area where price is going to bounce higher? It did back in October. It did back in January of 2021. So this level has to be respected until it's no longer respected. Now, personally, I would not jump into the stock yet. When the fundamentals are easy to understand, it makes the technicals that much more effective. And until we see Fed Powell chill out on the rate hikes, I think there's more downside risk. If anything, look for a short bounce from this resistance band. But if you want to play Realty Income longer term, the conservative route is to wait to interest rates at least pause before getting in. Thanks for watching. Subscribe. Please like the video.